AI is about managing data, right? It's about putting data into models that allows it to learn, self-learn, get to inference, and then get to generative AI. So the journey we're on is probably longer than 10 years. And ultimately, it's not about, do I have the data centers? Do I have the power? Do I have the fiber? But ultimately, do you have the data? Data is a whole new commodity. Given that most of the great businesses in the world are based here in the US, we have the data. We have the advantage. We're also the leader in entertainment, in music, in content. Creativity and having data are commodities.
Prominent CEOs, leading economists, iconic investors. Insights from the experts. The Walker Webcast with Willy Walker. See who's next.
It is a real pleasure to have my friend Marc Ganzi joining me today on the Walker Webcast to talk about all things digital infrastructure, the digital economy, and how DigitalBridge is meeting the needs of all of the household name companies that CNBC seems to myopically cover every single day. They don't talk a lot about DigitalBridge and Walker and Dunlop, Marc. They talk a lot about...
No, they don't. They don't. We're just the boring
Apple
plumbers, you know?
And Google. They talk about all your clients. They don't talk about many of my clients. Let me do a quick bio, Marc, and then we'll dive into the conversation. Marc Ganzi is Chief Executive Officer at DigitalBridge and has been building networks since 1994. DigitalBridge today owns 26 portfolio companies that operate in the cell, tower, fiber, data center, and small cell digital economy. Previously, Marc founded Global Tower Partners, GTP, which grew to be one of the largest private tower companies in the US before being sold to American Tower for almost $5 billion. Prior to GTP, Marc co-founded and ran Apex Site Management, one of the largest third-party managers of wireless and wireline communication sites in the United States. Marc graduated from the Wharton School at the University of Pennsylvania, is a member of YPO, and sits on the Broadband Deployment Advisory Committee of the FCC. Marc is an avid polo player, having won every major US 20 and 26 goal tournament, including the 2009 US Open, playing alongside brothers Facundo, Nico, and Gonzalito Pierres. You gotta love those Argentine names, Marc. Marc's wife, Melissa, and two children, Grant and Riley, also play polo. So much to cover, my friend, and so little time to do it. I want to make sure we get through all the various things. I'd love to dive in with you, and I know we could spend an entire hour on any one of these. As I was going through and highlighting things I wanted to talk about today, Marc, these are the either the words or the quotes from you that I'd like to touch upon in our hour. So, towers, broadband, data centers. Quote, migration from 4G to 5G is extremely complicated, unquote. Data to the edge, broadband equity access and deployment program, gigawatts, and we will spend a bunch of time on gigawatts. Quote, US will have a crisis in water and power, unquote. 100% recycled water, Reno, 6 distinct businesses inside a data center, crypto blockchain, cloud migration, AI migration from language-based models to inference. Quote, we are not chasing China, unquote. Will there be one winner in AI like Google and search? And finally, what on earth is, quote, feel-good version of SportsCenter, unquote. So let's start here. Go back to 94, Marc. And when you were looking at an office tower and saw that 1/3 of the income came from the actual tower on the top of the building and not the rents inside of the building, and how that got you headed down the path to spending an entire career focused on infrastructure and technology infrastructure.
Well, first of all, thank you, Willy, and the long and exciting introduction to my life. Well, look, the story starts like every, I think, good entrepreneur. Things in life happen accidentally. And at that time, I'd come out of Wharton. I was working for a real estate developer, and we were focused on buying distressed real estate from the Resolution Trust Corp. So I've just dated myself officially. But as a part of buying some of those, as you remember in those days, you had to buy pools of assets. You couldn't cherry pick you'd go in and you'd select which block of properties you wanted to buy. And there was a Mid-Atlantic portfolio of assets we had looked at. And, you are correct. One of them was an office tower that was the PSFS tower in Philadelphia. It's one of the tallest buildings in Philadelphia, but it was built in the 60s and kind of, part of a package of loans that we had to acquire. And there was this huge tower on top, and I really didn't fully understand what it was, but I did know it was producing, like $700,000 a year of income in a 20% occupied office tower that looked like good rent. So we spent some time diligencing it. And I said, well, naturally, I've got to go find somebody that understands antenna leases, and ended up meeting my partners, Alex and Jeff Ginsberg, who'd both attended Wharton. That's how I'd gotten to them. They were out actually building something at that time called cellular networks. And so it was the only one I could find from my Wharton cohort list that was actually involved in something tangential to antenna leases. So found these two guys, I met them. I said, look, I've got a bunch of these antenna leases. What do I know? I'm a real estate guy. I know nothing about telecommunications or cellular antennas. And they explained it to me, and they explained what was happening at that point in time in 1994, which was, the FCC was getting ready to auction off these things called digital PCS licenses. And so this was really the first migration, Willy, from 1G to 2G. And naturally, as the real estate guy in the room, I said, well, okay, this one rooftop's really valuable. How many other rooftops are going to be valuable? And they said, well, funny you should say that. There's going to be 50,000 new towers built to do this new technology called digital PCS. And I was like, wow, that sounds like a real estate business. That doesn't sound like a technology business. So I stayed in touch with them. We ended up writing a business plan called Apex Site Management. Alex and Jeff are still with me today, 31 years later. We're still partners. They're both, one of them runs one of our portfolio companies. The other is my chief administrative officer. And we've had an amazing 3-decade run in trying to find ways, Willy, very simply put, how can you weaponize that intersection between real estate and telecommunications, right? Everything that I've done in my career has been that intersection, and trying to figure out how to translate between the real estate industry, which talks one language, and the telecommunications industry that talks another language. And oh, by the way, telecommunications morphed into the internet, into ISPs, into cloud computing, private cloud, AI. Like you said, all the logos that we deal with, all the tenants that we deal with around the world are much like what you do at Walker and Dunlop. It's the same thing. I'm in the tenant service business, right? I wake up every day and I know I've got to serve my tenants better than anyone else does on the planet. And we've just chosen to take this format, which is serving, customers all around the world with ultimately their digital real estate needs, right? Whether it's a cell tower where I've got to go find the land, I got to build the tower. Whether it's a fiber route where I've got to go dig a ditch and what do you got to do when you build a fiber route? You need easements. Well, what's an easement? An easement's real estate, right? It's not that hard. You're building a data center. You go to, Loudoun County in Virginia, you got to buy land. You got to deal with the zoning board. You got to get power. You got to get all the things that you deal with every day at your firm. We deal with at DigitalBridge.
Start a legacy. Start turning dreams into realities. A better world begins with you. Better communities start with us.
But in a very distinct vertical, and in a vertical that's growing. I mean, one of the things that you point out is your occupancy has grown by 80% in your data centers over the last year. And I think your rents are up close to 30% over the last year. And I can go out and try and find any other asset class in commercial real estate, and they ain't getting 80% occupancy growth and almost 30% rent growth over the last year. So you're in a very interesting and a very hot spot right now. Before we jump to that though, Marc, let me just for a moment, would you run through back when you started in the cellular space, you mentioned that there were going to have to be 50,000 cell towers built to keep up with the growth from 1G to 2G. What was, when you started into the cell tower business, what was the projection of the number of cell towers we would need in the United States at that time to build out a nationwide cellular network? And then what exists today?
So there was, 1994, there's about 8,000 towers in the US, mostly FM radio, cable head end towers. There really wasn't a lot of cellular towers. People were plopping these cellular antennas on existing towers or rooftops. In the early days of cellular, like in a city like Philadelphia, someone like Comcast, Metrophone, or Bell Atlantic Mobile, they maybe had 50 towers, like, and that covered the whole city. Now you look in downtown Philadelphia, there's, each carrier probably has 500 different towers and small cells. So just the density as technology's gotten more advanced and we've moved to better technology, 2G to 3G to 4G to 5G, an initial cell tower in 1994 could cover 20 miles. You go to digital PCS and an average cell tower is covering about 3 miles. And then you went to 3G and it was 1.5 miles. Then you went to 4G and it was 3/4 mile. And then you go to 5G and a tower covers maybe a half a mile. So as these devices have gotten more sophisticated, and as we run more through these, not just video and messaging and Microsoft Teams, but I'm talking about active compute. I'm talking about applications. I'm talking about how you conduct your life, which is principally through your phone today, right? Much of what we do is through our phone. And this is ultimately, this is where the cloud stops and ends. It's where generative AI will stop and end, right? So we do a lot from these things and we put a lot of pressure in them. And a lot of data is moving through those phones ubiquitously and without your intervention and my intervention. Any given time, I have 40 to 50 apps open on my phone. You have the same thing, whether it's an airline app, whether it's a banking app, whether it's Amazon Prime, whatever it is, your phone is running in the background and it's running applications all day. And so that data is going back and forth between your phone and a tower, phone and your tower. Or if you have a Wi-Fi 6 hotspot like we have here in our office, you move off the mobile network and you move on to the Wi-Fi network seamlessly. And then you're using Wi-Fi to generate most of your applications and you're staying off the major network, whether it's Verizon, AT&T, or T-Mobile. And so we started with an industry that was 8,000 towers, growing to 50 to 60,000 towers. Then sort of the tail end of digital, we'd get to 100,000 towers, then 3G, 185,000 towers, 4G, moving to 265,000 towers. In 5G, we're moving to 400,000 towers. So the industry just keeps growing and growing and growing. And just in 5G alone, my customers are spending $1.3 trillion in CapEx. So the way you would translate that, Willy, is TI.
Right.
Like that's tenant improvements, right?
Yeah.
And its most fundamental basic way is what we know is over the next 7 years, our customers will spend $1.3 trillion retrofitting or fitting out the existing infrastructure, building new infrastructure. And what that does is it just creates more opportunity. It creates more opportunity for us to go build new towers, build new small cells, lease land, get building permits, hire lawyers, hire engineers. There's a whole ecosystem associated with mobile infrastructure. But make no mistake, it looks and feels a lot like real estate project management at its core.
I think it's really interesting, Mark, as you talk about the proliferation of cell towers, that as the technology has advanced and we've gone from 1G to 5G, that the distance between the towers has actually gotten smaller, not wider. And that at the same time, the height of the towers has gone from being very tall, as many of us remember back when they first started, and to your point about covering a 20-mile radius, that they've gotten actually much, much shorter these days, down to the point where if you go around Manhattan, you have a company called Extenet that has these small nodes that sit on every other street corner that allow you to use a small wireless network that allows you to move from one to the next. And one of the things I was fascinated with was the number of nodes that are inside of Madison Square Garden. Talk about Extenet and those small nodes and how important that is to dense urban centers to keep people connected.
Well, look, small cell technology has been around for a while. 1997, I ran into a guy named John Georges who created the patent of turning RF, radio frequency, into optical light and then optical light back into RF. And what's interesting about small cells is it is a very different business than towers, because when you go into a venue like Madison Square Garden, which we manage, co-manage with the Dolans from a wireless perspective, we have over 180 small little towers, which is called a node. So a node's like a little antenna and it's a sector, and a node will literally cover like one swath of seats. We have it so surgically pointed. And then around the different levels of the concourses in Madison Square Garden and the locker rooms and the infrastructure underneath it, we've got different levels of nodes and fiber, and then somewhere in there is a huge meet me room. We have actually a server room where all the radios come back to one location. And then that fiber optic cabling goes out to each carrier's network. So we have with each customer, we have over 150 distinct radios inside of Madison Square Garden. And so what that does is when the game turns on and there's 20,000 people packed in there, everyone has a seamless experience. We have the same thing at AT&T Stadium in Dallas, Texas, which is called Jerry World. And we've got it, we've got NFL stadiums, hockey stadiums, baseball stadiums, basketball stadiums. And it's a complicated business. Not a lot of people do this. There's only 2 or 3 companies in the world that actually do this and do it well, to the point where somebody like a Jerry Jones will turn over, their communications, or the Dolans will turn it over to us and say, hey, make it happen. And we're responsible for the performance of the network. We actually run the RF. So the frequencies of the carriers run on our infrastructure. So unlike a tower, we just build the steel and we put the antennas up and we get out of the way. In the small cell business, we're actually responsible for delivering the signal. So it's a much bigger burden. It's a much higher responsibility. And so we had to move a little further up what I would call the stack, right? And so customers rely on us. Verizon relies on me. Every time the Knicks or the Rangers play, we got to perform. Yeah. And we got to perform for 20,000 fans, of which a third are on Verizon, a third are on T-Mobile, a third are on AT&T, and everyone's phones have to work because everybody wants to upload an image. They want to get on Instagram. They want to live stream something. Whatever they're doing, we know we have to deliver a perfect experience for every fan that walks into Madison Square Garden. And that's hard to do. It's not an easy business. But if you're ever walking through Madison Square Garden, any sports stadium, and you wonder why your phone works, it's because Extenet is delivering that signal, and we're doing it through a shared network. That's the other challenge. AT&T, Verizon, and T-Mobile all share the same infrastructure at Madison Square Garden. Right. So it's interesting. We're not building 3 different networks at the same time. We're building one network that encompasses all the different spectrum bands, all the different radios. And oh, by the way, the Knicks have their Wi-Fi on there. The NBA has signal on that network. The NHL has signal on that network. New York City's police department is on that network. And we also have public safety there as well. I won't tell you the agency, but we have agencies there in case
I'm
there's
sure.
a disaster of some sort.
Sure. So there's a little homeland security.
It's an interesting business. And again, but you know what? It's real estate, right? What did I have to do? I had to negotiate a long-term lease agreement with the Dolans. And part of that lease agreement was taking a demised premises, which is the radio room, where I actually have a lease. I have a square footage. And then associated with that square footage, I have the right to the chases and conduits, and I have the right to place the antennas. And then it's a revenue share. The Dolans are my partners. And it's worked out really well. It's been a great relationship with them we've had for over a decade. A long relationship.
You talk about Jerryville. If the Cowboys continue to lose, he may not want it to be called Jerryville. He might want to be calling it AT&T Stadium. I digress. As a faithful Washington Commanders fan, I had to put that poke in on Jerryville. Marc, real quick, I don't want to spend a ton of time on this, but you know a ton about this, particularly given the FCC commission you sit on. The Broadband Equity Access and Deployment Program, or BED, which is part of the Inflation Reduction Act.
Yeah,
I read the testimony of Brendan Carr, who's a FCC commissioner, to the House Subcommittee on Communications and Technology back in July, and in it, he basically, if you will, poked at the Biden administration, basically saying that $42 billion had been put towards this rural broadband connection program, and that almost 1,000 days later, not a single home, not a single business had been connected to it. I've heard you talk about this a little bit and how slow it has been in the rollout of it. Should expectations have been higher, or is the whole process of laying down cable and connecting rural consumers and the rates that they're going to pay and the subsidies from the government and all those complexities? And after reading Carr's testimony, I went back and looked at sort of both sides of the aisle as it relates to why we are where we are on this. And there's no doubt there's a lot of red tape. There's a lot of rate issues to deal with. And there's a lot of just, supply chains that have been very slow in rolling this out. But it is quite something that almost 1,000 days after $42 billion went to it, we don't have a single home or business connected to it. Anything I'm missing in that read of it?
Look, it's not exactly as Brendan characterizes it, and I think Brendan has his agenda, and he's a friend, and I know him really well. Commissioner Carr is a good guy. I think everyone that serves on the FCC is well intentioned. I think I'm well intentioned. I think we're all trying to do the right thing. The challenge is the machinery that is Washington. It's not a Biden problem. It's not a Republican-controlled House and Senate problem. It's just the nature of how these appropriations go out is just slow. And the culprit here is really NTIA. NTIA is responsible for doling out the capital and then getting it out to the states. And then the states have to go through their appropriations and dole it out again through their PUCs. And so the machinery of how we've organized this was just wrong from the get-go. To use a fiber analogy, the wiring was bad, right? Because you can't expect NTIA to deploy, $37 billion in, like that. It just doesn't happen. So some of these grants are now getting out into the states. We've actually won a few of them at our portfolio companies. So, in Louisiana, Vertical Bridge, won part of the wireless part of, part of this is also creating wireless solutions. It's not just building fiber to the farm. There's actually a process by which other technologies are used as well. So we did a combination of a fiber tower built in Louisiana to help rural communities get connected. And that's worked out really well. That was a $100 million grant that was won by Zayo and Vertical Bridge. They're doing it in connection with the state of Louisiana. It's working well. Won a $120 million grant in Nevada to build high-speed connectivity between Reno and Las Vegas, which was really about creating that commerce road. And that's worked out amazingly well. We've got 5 customers already on that network signed up to it. And so it's starting to happen, right? It's slow. And I think the frustration from Brandon's perspective is, could we have gone faster? Sure. Are we set up to go faster? No. And I think ultimately there were some things in that could have been done to have accelerated it. I would have liked to have seen more money for E-rate. So that's the program that brings fiber to schools, particularly bringing technology to grade schools and high schools where we're very underfunded. We missed that. There should have been a swim lane dedicated specifically to the Department of Education where we could go a little faster, supporting our kids and supporting, candidly, schools that are in inner cities, which is the opposite of putting fiber to the farm. I really wanted to put fiber into areas that were underserved from an economic perspective. And so there's a lot of communities where, fiber penetration in the US in the urban core is less than 20%, Willy, where the rest of the US is about 87% connected to fiber and to broadband. By the way, 87%, we're not even a top 10 economy in terms of connectivity for fiber to the home. So we have a long way to go. And I'm not pessimistic. I was part of that machinery that helped create the programs. And I think we've got a lot of more work to do. And hopefully this continues and we can deploy the $37 billion. It's a $65 billion total program, but the NTA appropriation is about $37 billion. So we'll get there. And the states are moving slow, but it's coming. And for an industry guy, it is a little frustrating because I'd like to see this money in the hands of school districts. I'd like to see it more in the inner city. Yeah, sure. We can light up underserved rural communities, but those aren't the people that are screaming for equal access to broadband. The people that are screaming for it are kids and people that don't have the income to get broadband equality. That's where I would have liked to have seen the balancing act. I'm kind of vocal about that. I don't really like to hide my feelings. And I'm delighted to serve the FCC. It's been a real honor and a privilege to serve with those commissioners. And I got put there by Obama. Trump kept me on. I've stayed on through the Biden administration. And the thing that I love about what I do, Willy, is what we do isn't red. It's not blue. digital infrastructure tends to be purple. So we do have an industry where I think the aisles come together, and we do recognize that there's a purpose to what we do, which is providing, connectivity and infrastructure for all Americans, irrespective of political affiliation. So that does make me feel good at the end of the day.
So let's dive in, Mark, to data centers. I want to loop back to Reno because you just mentioned Reno and why Reno has become such a hotspot as it relates to the growth in data centers. But you're currently the largest private owner of data centers in the country. You've got 210 data centers that consume 3 gigawatts of power, and you have another 100 under construction that will consume another 3 gigawatts. When I listen to you talking about the size and scale of all this, to be honest with you, when I hear 3 gigawatts, I don't really know how to size that to kind of like get a sense of how much power is that and what do we do. So I went out and pulled a couple things together, and I want you to dive in to help everyone understand how important power is to this entire industry. But a lot of people heard about Microsoft investing with Constellation Energy to get 3 Mile Island back online. In looking up what 3 Mile Island generates, it generates about 800 megawatts of power per reactor. And so you'd need 2 3 Mile Islands or 4 reactors from 3 Mile Island to power what you have already in data centers in the United States, or 2x that to do what you're currently right now building. And even when you kind of think about that, I think about a big nuclear reactor and I say, okay, it's got to be producing a lot of energy, but try and scale for people just the intensity of power consumption at data centers today, and why the quote that I said previously that we are going to have an energy and water crisis in America is something that is so important for the growth of this industry.
Well, look, you framed it right, and you're using 3 Mile Island as the analogy. I'll tell you the way we describe it is like New York City consumes 5 gigawatts of power, right? New York City, biggest city in our country. And every day our data centers, we wake up, we consume about 4.1, 4.2 gigawatts of power. We're bringing another 3.7 gigawatts online right now. So we'll be pretty darn close to 8 gigawatts of power, which would be a factor of like 1.6 times the power that New York City consumes, just to give you a sense of a frame of reference. And, our pipeline today is about another 5 gigawatts behind that. So in theory, we're going to 12 to 13 gigawatts, which again continues to add to our assertion that we're the largest landlord.
That's just you.
That's just DigitalBridge, the 9 companies
that's just
that we
you.
own.
So give us, there was something that I heard you talk about, Mark, that was that Elon Musk's prediction is that the data center industry will require 80 gigawatts of power once it kind of gets fully scaled. Is that kind of where we're heading? Is that a right sizing of it?
That's right. And Sam Altman will tell you there's 50 gigawatts needed to power AI, and Elon's saying 80 gigawatts. And I think Elon's number is kind of Sam's number plus public and private cloud. So AI will consume 50 gigawatts. Private and public cloud will consume another 30 gigawatts. So the industry sizing is about 80 gigawatts. And where we are today is we're probably at about, as an industry, 15 to 16 gigawatts. We were a year ago at about 13 gigawatts. I think we've added another 3 gigawatts of capacity this year.
And let me just jump in for 2 seconds. As a reference point, you mentioned public cloud. Public cloud today is using about 13 gigawatts.
Yeah, that's about right.
So public cloud and data centers are about the same right now, where data centers have now jumped up to about 15 gigawatts, growing towards that 50 or 80 gigawatt number, whereas private cloud continues to grow at an accelerated pace, or
private cloud's growing super fast. Okay. So you've got kind of 3 swim lanes of growth happening at the same time. And then I'll introduce a 4th one to really confuse you and mess the whole conversation up. But let's start with public cloud, because it's something we all know. There isn't a day that goes by that none of us, we interact with whether it's Amazon, whether we're logging on to Microsoft Azure, we're logging here on to Zoom, we're doing this call on Zoom. So we all touch the public cloud every day. And all these applications operate in AWS's cloud, or they operate in Azure's cloud, or Google Cloud, or Oracle's cloud. And, folks like Zoom use one of those clouds to create this opportunity for us to talk. And so that's been going going steady and hard since 2011, right? Public cloud started over 12, 13 years ago. And so we're probably 70 to 80% built in terms of the public cloud infrastructure, and it's consuming about 13 gigawatts. It's the biggest user of data center capacity today is the public cloud. Now, what's private cloud? Private cloud is much like the public cloud, but it's a private cloud where only your data sits, and it's very secure. And so we have a company called Switch based out of Las Vegas that does it. Equinix has a little bit of this private cloud. And what's been happening, and the reason why Switch has exploded and grown so fast, is big corporations, big government agencies, they've lost a little trust in the public cloud. It's not to say they don't put those workloads out there, but there are certain workloads that Federal Express or American Airlines or JP Morgan or Dell or the US federal government, they want to know that those workloads are private, they're sitting in a very secure location, and it's not commingling with the public cloud. It's just staying resident through their own VPN, their own secure VPN, virtual private network connection, and you're accessing that data only for your internal use. So, for example, a lot of banks now are creating for your financial data, they're creating a private cloud just for Willy's data, right? So Willy Walker's financial data, let's say you bank at JP Morgan, is going to sit in a private cloud.
Good guess.
Because in the public cloud, that information sometimes would get corrupted and people could jump into the public cloud, take your financial data and pull it out. So there's been a lot of cleanup related to what we call reverse cloud. So the thematic over the last decade has been every CIO and every CTO, including yours, who runs Walker and Dunlop, is like, hey, Willy, we got to get everything out into the public cloud, right? And so you guys quickly migrated. I don't know what platform you picked. You picked one of the platforms.
Yep.
But Walker and Dunlop operates probably on one of the public clouds. I don't know which one you guys use, but
AWS.
whether it's AWS or Microsoft, you use one of them.
Yep.
So the problem was your CIO probably a couple of years ago said, we have all this client data, all this landlord data, we have all this tenant data, we have this property management data, but we got to keep it secure. And so some corporations have said, okay, I'm going to put my active compute, which are my applications, in the public cloud. So the stuff that helps us run Walker and Dunlop every day, we're going to move that to public cloud because you have to. It has to be nimble, it has to be flexible, and all your employees and all your clients have to use it. Now, the private cloud piece is Walker and Dunlop's financials, Walker and Dunlop's client data, your tenant data, your landlord data. All of those have to be siloed off and secured. Why? Because at the end of the day, you get hired because clients trust you. They trust you to manage their real estate. They trust you to do their leasing. They trust you to do their brokerage. Whatever it is that you do, it's a relationship based on a fiduciary level of trust. That trust is only as secure as the data is secure, right? And so you've got to keep your client data very secure. So maybe you're not doing this yet, but guess what? Dell is, Federal Express is, Oracle does this. Oracle has a private cloud business. And so you're seeing a lot of this data that's very secure that needs to be pushed into a private cloud environment. And so you've got public cloud, you've got private cloud, and now you have AI. Along comes AI, this monster, massive amount of compute where we're building these language-based models, where we're getting smarter and smarter data sets that are beginning to think for themselves and move to what we call inference. Inference is when data starts thinking for itself. And so along comes AI, and Sam Altman's really smart. I agree with him. There's 50 gigawatts of data centers needed to go build AI. And so you got the 50 gigawatts of AI, you've got the other 30 gigawatts of private and public cloud, and you just have the sector just exploding. And all of that, Willy, against an environment where land is tougher to get, permits are tougher to get, power is tougher to get, getting the right fiber solution set data centers tougher. And so our sector is coming of age, but it's coming of age in a moment where resources are getting more and more constrained. And then water, right? You're using a lot of water to chill these data centers. Where's that data center located? Oh boy, if it's in Nevada, guess where that water's coming from? It's being leased from Colorado. It's really expensive. You're going to tell me you're wasting the water. How come you can't recycle the water through osmosis and clean up the water? And so our business it's beautiful, it's great, it's exciting, it's moving really fast, but it has complications. And that's where the specialization comes into play. It is real estate, but it's incredibly specialized real estate.
So two things I want to dive in on before we move to the a little bit getting under the hood of data centers and the distinct businesses inside of them. And you actually talked about three of them right now, but I want to dive into that a little bit deeper. But as we talk about energy, a couple things. First, you have a partnership with Microsoft. I believe in Oregon, we're using 100% renewable water at a data center. I think I'm right on that. Is that correct?
We do that. Yes, it's actually in Santa Clara. So
Santa Clara, sorry.
It's in Silicon Valley. But
and then Switch, which you talked about, is 100% renewables. So Switch, which is this private cloud provider of all those applications that you just talked about of Oracle and Dell and all that, they, since I think it's 2016, have been fully renewable. So, I mean, is that a competitive advantage to Switch versus the other competition that is out
100%.
there pulling a ton off the grid?
100% it is. And we've been able to do that, and it creates a set of solutions for the customer that they want to get carbon neutral as fast as they can. So getting to net zero is a high priority for Amazon, Microsoft. And oh, by the way, same thing for American Airlines or JP Morgan and the US federal government. So when we bring a customer in a Switch, we're providing them with a lot of connectivity, a ton of security, and we're giving them 100% renewable power. And that is why Switch is doing quite well, because it's in the solutions business, right? Everybody wants to be in the solutions business. And that combination of security and clean energy is really important. Those are two things that the customers at Switch really value. And look, all of our data center businesses are following that model now. You know, whether we're building our own microgrids adjacent to solar and wind and hydro, or whether we're providing a PPA directly into the customer where we bring that renewable power, you know, bring it onto the grid, then we bring it through the grid back into their data center. We're getting creative, we're learning, we're getting better at this. I've committed my portfolio to being net zero by 2030. It's going to be hard, you know, because even a data center that's 100% renewable still uses a little bit of grid power to equalize, because you have this thing called intermittence. Solar and wind and hydro are unpredictable, right? They're not perfect sources of power. The sun's not on 24/7, right? The sun goes away for half the day. Wind can die down. And sometimes with hydro, we don't get the results we want. So we've been honest with our investors. We've been honest with our customers that, you know, we do have 100% renewable data centers, but ultimately all of our data centers do have a backup, which is batteries, and has another backup, which is generators, and then a third backup, which is we're connected to the grid. We can never go down, Willy. It's really important to us. You know, the promise or the commitment we make to our customer is the power is always going to stay on.
Right.
That's critical.
As you talked about where data centers are going these days, you mentioned Herndon previously. Virginia's done an incredible job of attracting a lot of data centers, particularly to Northern Virginia, and Duke Energy has been a big partner there. I looked up Duke stock as thinking about kind of derivative investments off of the data center surge, and Duke's up 27% over the last 6 months. And yet I think the number, Mark, is that 24% of the electricity generated in the state of Virginia today is being used by data centers. So almost a quarter of the total energy generated in the state of Virginia is going to data centers. And as you've said, a number of data centers are moving to other parts of the country where electricity and water are more abundant or potentially cheaper. You mentioned Montana in one of the interviews that I'd heard you talk about, and I went and looked up Northwestern Energy in Montana, and their stock price is up 18% over the last six months. But talk for a moment about, there's clearly the investment play of buying DigitalBridge, investing in NVIDIA as it relates to the chips that are powering the AI revolution, et cetera, et cetera. But as it relates to the infrastructure behind what you're doing, there's the construction, there is the power, there is the water. I looked up Corning, and Corning is up 63% over the last year. So there is cable that's coming into all these places. Talk for a moment about those derivative investments.
Look, we call it ecosystem. And I think whether it's investing in power generation like Siemens or Caterpillar, you know, those are good tangential stocks. Those guys are backed up 2 to 3 years on their orders. And a lot of people don't think of power sets, right? But ultimately, remember, at a data center, you know, we are investing in the power and the gen sets and those backup resources. So whether it's Kohler, whether it's Caterpillar, whether it's Siemens, you know, we have these sophisticated power systems that provide the primary power, but also provide the backup power. So that's one of those interesting adjacencies. Certainly, Corning's an interesting play because they're a leader in manufacturing fiber. Dycom is a company that does a lot of fiber installation work. A lot of people don't look at really Dycom. That's kind of an interesting business. And whether it's CoreWeave, NVIDIA, ARM, Allied, all these guys that are building GPUs, Intel, that are building chips and GPUs, that's also super, super important as well, because that part of the ecosystem is growing really, really fast. As you know, NVIDIA is backed up 3 years. ARM's due to deliver their first chip in 18 months. Masa's putting a ton of money into that. CoreWeave, meanwhile, is like an outsourced provider of GPUs. We're a big lender to CoreWeave. We do a lot of work with them. We do work with all these guys. These are all customers of ours, so we know them really well. And I would just say, from an ecosystem perspective, all these businesses are performing well, and they need power, and power is in short supply. And so, the reason why a Constellation or an Xterra, or a Duquesne Power, Light, Puget Power, all these utility companies have record orders in terms of new commitments to providing power. And on those PPAs, the prices are going up because at the end of the day, Microsoft and Amazon want to be locked in for 15 years on power. And so it's really a great leverage moment for the utility industry, and they know that they're playing their cards correctly. And at the same time, the DOE on the other side of the fence, we've spoken to the DOE and we talk to them all the time. They want to make sure this doesn't hurt consumers. So ultimately, we want to see utility prices stable. We don't want to see it go up because of data centers. And so there's a lot of conversation about how the data center sector can contribute to the grid. How does it become a good partner to the grid? And I think this is something the DOE is super focused on, which is why you see all these forms of alternative energy popping up, which is how do we not disintermediate or disturb the grid and maintain our, hopefully our artificial intelligence superiority in terms of where we're going, because we are in an arms race, in terms of building, the best AI models.
Final thing before I want to dive under the hood, if you will, of data centers and have you just describe quickly the 6 different businesses that run inside of there, because I think it is fascinating. Most people, I think that data centers today are all about AI, and it's actually they're distinct businesses in there, and then the pricing model that you've changed to. But before we jump to that, one final thing on location. I mentioned Reno, Nevada. Reno, Nevada is, I believe, 2 milliseconds from Santa Clara as it relates to latency. And one of the, I think, interesting things here is that latency as it relates to AI really isn't a huge issue. In other words, like when we read Michael Lewis's book on trading and trying to front run trades,
right,
location of the data centers is exceedingly important because 2 milliseconds is 2 milliseconds too late. Whereas in AI, the location of that 2 milliseconds latency between Reno and Santa Clara isn't that big a deal. And yet at the same time, Reno as a city and as a state is allowing for the building of data centers from a regulatory standpoint, from a permitting standpoint, to grow very dramatically versus in California, maybe not so much. Is that the reason why it's all going to Reno? Because power can't be that much cheaper in Nevada than it is in California.
It is. It's cheaper.
It is.
It is. It's materially cheaper.
Oh, really?
But land's cheaper, right? First
Right.
of all, land is way cheaper. Power is cheaper. Zoning is way easier. You don't have to build everything earthquake proof like you have to in Santa Clara. So our construction costs go way up in Santa Clara against Reno. And look, the reality is you can't get 50 megawatts of contiguous power to a piece of real estate in the Bay Area anymore.
Right.
It just doesn't exist. There's 2 power providers, Silicon Valley Power, Pacific Gas and Electric. And if you can't get that power, you don't even option the land. You don't even try.
Right.
It's nothing to try. So along comes Reno, Tesla Gigafactory's there. The Switch SuperNAP is there. Google's going there. Other companies are going there, building data centers. A lot of renewable power. We got a ton of solar there coming into our data center. And you have a state that's like happy to see you. Nevada's like, hey, come to Nevada. California's like, hey, how can we tax you and make your life more difficult? I mean, California is literally a very difficult place to visit. Love California, great place to go visit, but they've made it literally impossible for you to do business there, which is why we moved our headquarters from LA to Florida. We wanted to be in a state that actually wants us to be here and wants us to do more business here, not less business. So I think you got to create the right environment. You've got to have power, land, zoning, a proactive government that wants you there. And that's why people have flocked to Reno, because it's just a better submarket than Santa Clara is.
And there's obviously huge number of jobs that are involved in building data centers. But then at the end of the day, once the data center gets up and running, it actually is running servers that for end use might be disintermediating human beings or making jobs go away. Where do you play out on that as it relates to the impact of technology broadly and AI specifically as it relates to job creation as being a threat to the American workforce?
Look, I think the labor force in general, Willie, is shifting, right? I think the jobs that you and I coveted coming out of college 30 years ago are very different from the jobs that kids are coming out and getting today. There's a whole different set of skills. And again, related to digital, right? I mean, IT jobs, web programming jobs, database management jobs, even in big corporations, big IT organizations that are built to run the data, keep it secure, and make sure, if it's a car manufacturing company, making sure the manufacturing line moves more efficiently and faster. So I don't think digital is disintermediating jobs. I think there's a lot of job creation in digital. There's a lot of job creation in the management or the asset management of digital assets that didn't exist 10 years ago, didn't exist 5 years ago. You and I were talking, look at cryptocurrency, by example. That's a whole industry now, right? And so I think
that you got out of. You don't like crypto. You had a crypto. You had a mining company.
It's not for us, right? Crypto wasn't for us because the cash flows are too short. They're kind of month-to-month cash flows, and we don't really own a lot of real estate where the cash flows are month-to-month. If you look at a data center at Switch, we're signing a 10 to 15 year lease. You look at the crypto mines we owned in Iceland that we sold, our average customers was there for less than 30 days. So the rents are really high in a crypto mine, but the volatility of the customer is really strong. So you're getting a lot of churn and a lot of turnover. And to be honest, I kind of like a data center with 5 customers with 15-year leases versus 50 customers with 1-month leases. That seems like a better piece of real estate for us. And so, look, we built a great business in Iceland. It was very valuable to somebody else. They paid us a high teens multiple, and we said, I'm very happy at a blended high 6, low 7 cap rate to get out of a piece of real estate that's all month-to-month leases. You would probably make the same decision as well, faced with that data. And we haven't made 3x our money. We made 3x more.
I'm surprised you're also not big on the blockchain. And it's so interesting in the sense that a lot of people have talked about the blockchain being the future of secure data and therefore being able to get around.
I'm a big proponent of blockchain.
You are.
It's not something we invest in directly. It's just, there's other people that are smarter and are better at it in venture and private equity that do that. We're not set up to do that. And so we have friends that do it. That do it at Vista, that do it at Kleiner Perkins, that do it at Sequoia. There's guys that understand blockchain way better than we do. And so I'd rather give my money to them and let them go invest in blockchain. And same thing, a lot of those partners at those tech firms invest with us because we're really good at building a data center. But make no mistake, that blockchain technology sits in our data center. And that blockchain technology runs on our fiber networks globally. So we are a part of blockchain, but we're the infrastructure or the plumbing behind it.
So just real quick on data centers and when someone walks into one, I mean, many of us have never actually been into a data center, but the pictures we have typically seen is, racks and racks of computer servers.
Blinking lights, a lot of cooling.
And lots of cables, right?
Yes.
And I've heard you talk through sort of the 6 distinct businesses inside of it. If you could just run through quickly from, racks and servers to hybrid cloud to enterprise data center, run through that. And then more importantly, how you've changed your pricing model, because I found this to be super interesting as it relates to charging for space and now charging for energy.
Well, look, the data center sector is really 6 different business models wrapped, all into one. And the way the ecosystem played out is, all the way down the IT stack, you have the first business model, which is called managed services. So that's basically you're a small business. You don't need your own IT infrastructure. You hire someone to manage your whole IT stack. And it's not a great business, trades at like 6 to 8 times EBITDA, but there's a place for it. People do need to have their IT managed. And so we call that managed services. You move up the stack to the second swim lane, that's called hybrid cloud. So hybrid cloud is a company that'll host your cloud for you, whether it's private or public. They'll also host all your IT infrastructure. So it's an integrated solution that gives you the cloud and gives you your own internal operational flexibility. So we call that hybrid cloud. The next move up is called enterprise. So enterprise data centers are the data centers that have been around for 25 years. Your Florida Power and Light, your Georgia Power, you want to go put your servers in somebody else's building and you want to stay out. You don't want to own your own IT infrastructure. So big enterprises, big corporations will go put their servers in somebody's data center, and that's called enterprise or co-location, as it were. Good business, trades kind of at 8 to 12 times, maybe 13 times. Contracts are sort of 3 to 5 years in duration, where managed services and hybrid cloud, the contracts are year to year. So the shorter the cash flows, obviously, the less valuable the business model is. The last three verticals are quite valuable. So the fourth business model is called edge compute. So edge computing is where you have these data centers. They're located in secondary and tertiary markets, sometimes in the suburbs, where the cloud customers and private cloud customers are starting to deploy technology on the perimeter of the network. So as the workloads start to shift and move, it's not just in New York, San Francisco, Atlanta, and Dallas. You start to see these secondary markets form, and that's called the edge. And you're starting to put resources on the edge of your network. That's a very good business. So that's a publicly traded REIT called Equinix, and that's our company called DataBank. They focus on the edge and providing that connectivity that goes from a core market out to an edge market. Very good business. And those businesses are, trading at, 26 to 30 times EBITDA or AFFO. Equinix is a really valuable REIT, as you know. It does a great job. Then you move into public cloud. So this is called hyperscale data centers. So these are data centers between 50 and 200 megawatts, where it's a campus setting, and they're principally built for Google, Oracle, Microsoft, Amazon, Meta, Apple. Everyone that's operating in the public cloud is a hyperscaler. And the hyperscalers like to be in areas where they get a lot of power, a lot of privacy, and that's kind of the fifth vertical. And leases generally there, Willy, are like 10 to 17 years in duration. So that's a good business. People, a lot of capital like KKR, GIP, Blackstone, Macquarie, EQT, Brookfield, they're all putting money into that vertical because it's infrastructure, right? It's real estate, it's infrastructure, long-term leases, very safe, you can't get hurt. And then the final frontier is private cloud.
Right.
So that's where Switch is. Equinix has a small private cloud business as well. That's one of the fastest growing verticals, really sticky, highly secure, tier 5, difficult to build, high CapEx, high barriers to entry. And those businesses, again, trading at 28 to 40 times EBITDA, very valuable, very difficult to replicate. 70 to 80% of the tenants are investment grade. So long-term leases, high investment grade concentration, and really difficult technology to replicate. Those are kind of the 6 different verticals that exist in the data center space today. If you're thinking like a landlord, how do I play in the data center space? Those are the different business models that you can play in.
Super interesting. And when I hear you lay it out that way, it gives me a really good sense. I mean, we hear about data centers and we sort of think just AI, and we don't really understand what's going on and where the actual scale is. And then also when you laid out what those different businesses sort of trade at, so much of that is based on those long-term contracts. It's fascinating. Thank you for laying that out. One of the things better than most, Mark, is sort of the AI arms race. And a lot of people talk about, who are we trying to catch up with? And China seems to be out there as the likely adversary, if you will, in the AI arms race. And as I said at the top of the call, you're not a big believer that we're in an arms race with China. Why do you think that's the case?
Well, I think, look, they've got their sort of hyperscalers, and they've got their AI champion, national champion that's building their infrastructure. Remember, AI is about managing data, right? It's about putting data into models that allows it to learn, self-learn, get to inference, and then get to generative AI. So the journey we're on is probably longer than 10 years. And ultimately, it's not about, do I have the data centers? Do I have the power? Do I have the fiber? But ultimately, do you have the data? You got to have data. Data is a whole new commodity. And so given that most of the great businesses in the world are based here in the US, we have the data. We have the advantage. We're also the leader in entertainment, in music, in content. And we're voracious consumers of that content, and we create content every day. And so creativity and having data are commodities. And it's not to suggest that China doesn't have its own content. It's not to suggest that China doesn't have its own great corporations and its own great data sets. But at the end of the day, all of those things are owned by the state. So the state controls that data. And the state's going to build their own language-based models. And based on that, the data is going to get to a certain set of outcomes. So I'm thinking more down the road, perhaps, than others are thinking. My belief is probably more in the Elon belief that ultimately the country that moves the fastest to protect its data and manage its data and creates those models in a safe environment that's secure and allows those models to grow in due course, and you feed it, you're going to get to the right set of outcomes. But remember, it's the old adage that I learned at Wharton when I went to my first computer sciences class, I think in 1993. It was GIGO, garbage in, garbage out, right? If the data is not good and the data is not clean, you're going to get to a lot of false outcomes. So in an environment where the state is protecting the data and shaping the data and you're manipulating the data, you're really not allowing AI to grow the way it needs to grow. And remember, it has to grow. It has to self-learn. So you can't manipulate it. There's a great book called AI Superpowers. Everyone should read it. It takes you back 30 years in time around the invention of AI and how it came and ultimately the different schools of thought that have evolved around, do you control it? Do you let it go? And then the evolution of chat and OpenAI and what the Chinese are doing with their models. And look, I think we got to run our own race. I don't think we need to be consumed with trying to compete with China on whether we get to AI superiority. I think we have a lot of advantages. I think we have great corporations and we have great data. And it's really our ability to continue to feed that and foster it and grow it in safe environments with the right data sets that are going to create the right outcomes. I'm very skeptical at China's ability to go grab and weaponize data from democratic controlled corporations that aren't going to give their data to China. Now, China will have to go steal that data or they'll have to manipulate that data. But ultimately, he or she who controls the data is the one that's going to be able to put that into the right language model that allow it to learn, that allow it to get to inference, and that allows you to move to generative AI. So I don't want to belittle the audience. It's just complicated, right? Because there's so much data and the ability to manage that data and the ability to weaponize that data. I think in a military context, it gets more scary, right? I think I'm thinking about it as a businessman and I'm thinking about it as an entrepreneur and as somebody that runs, I think we have 46 companies today. I'm always thinking about how do I keep my data secure and how do I make my businesses better and more efficient? And every CEO is struggling with that today, which is the efficiency of AI against opening up my data and allowing it to potentially be manipulated and corrupted. And so I encourage people when they're thinking through these decisions is to do your homework, go slow. You don't have to go fast. Everyone thinks like we're in this AI rush. You're not. You can take your time. And ultimately, you and I will sit down 3 years from now and 80% of your business will be run by generative AI. It will be. Whether it's brokerage, sales, property management, whatever it is, a lot of your decision-making, a lot of your grunt work will be handled by models that'll make those decisions that'll enable your executives to be more effective and to move faster.
Yeah. So final one, because we're almost out of time, which is You don't believe that there is one winner in AI, which I find to be, we've talked about telephony and you
I don't
talked
think
about
there
the
is.
three major cellular carriers. You
Yeah.
sat there and said Verizon, AT&T, and T-Mobile. There are only really three of them. Yes, there's some others, but there are really only three of them. In search, we really have Google with Microsoft playing kind of a bridesmaid role, but not really very
Right.
much so. But yet at the same time, you think that we will have competition and that there will not be one dominant player in AI. Why do you think that is?
Well, I think there's different platforms. I think there's different models being built. I think, certainly what Sam is doing is interesting and he's got a lot of money, but don't sleep on the other players. I mean, everyone has the capability to build their own models. Everyone has the capability to proliferate that technology. I mean, we've got a partnership with Intel called Articulate, where we're building our own generative AI business models, and we're killing it. I mean, we're making money. We're signing more accounts. Our monthly recurring revenue is quadrupled in less than 2 quarters. So there's other people out there doing it. Nobody has the patent on AI. You got to build the models. You got to put the time in, and you got to have the data. I mean, if you don't have the data, you don't go anywhere. So data is the new currency, Willie. If you have your data, keep it safe, control your data at your corporation, because eventually you're going to be able to weaponize that and really enable you to create comparative advantage.
Super cool, Mark. I'm so appreciative of you taking the time. It's I've
Thanks,
been
Willie.
watching everything you've done. You came out to Sun Valley and spoke at our client conference 2 years ago, and had everyone's eyes. And
That was super fun. I brought my daughter that day, and I was like so excited to she sometimes watches me public speak, but I think that was the first time she'd been where I'd gone to a conference. I was like, I'm so excited she's there. And of course, you put Jamie Lee Curtis in front of me. My daughter's like, Jamie Lee Curtis was awesome. Dad, you're okay, but Jamie Lee Curtis was way better. So the whole plane ride home, I had to figure out why I wasn't as effective as Jamie Lee Curtis. But that was super fun, and I'd love to come back. It was a great conference. You run an amazing conference.
I'm super appreciative of you taking the time today, you coming to Sun Valley, and I very much look forward to seeing you sometime soon. Thank you so much. And not that you need it, but great luck to you and the team at DigitalBridge for all your undertaking today.
Thanks, Willie. Appreciate it. Be well.
See you, buddy. Take care. Bye-bye.